Today we're going to be talking about entries. This is the biggest secret weapon used by all the top traders everywhere in the world. They are masters at this. And if you want your trades to start performing better, all you need to do is master your entries. Just think about it. How many times have you taken a loss on the trade, only to watch that thing move in your favor seconds later, just like you originally planned? Or how many times have you taken a small profit on a trade, then you spent the rest of your day just watching that thing go higher, higher, and higher, and you're not even in it anymore? Or worse, how come the harder you study or the more trading knowledge that you consume, you do not find yourself making any real progress? You continue to stay stuck in the mud. Now, if this is you, your problem is entries. By the way, my name is Doug, and I've been a professional trader now for more than 20 years. This is my life. And today I'd like to show you the easiest and fastest way for you to master your entries with something we call the FSE method, First Sign Execution, also known as the Unsharp. This is something that I used last month to help me make an excess of $100,000 of trading profits. It's also something that I've taught to hundreds of traders from all over the world, and I've helped them transform themselves from being consistently frustrated to consistently being profitable. And today I'm going to show this to you in just 4 simple steps. Now, before we get involved in the steps about the Unsharp method, let's talk about what it is, because there's a good chance you've not heard about it before. It's a way to predict a future pattern, a chart pattern, long before that pattern has developed. And let me show you what I'm talking about right here on the screen. You will see your typical chart pattern cheat sheet that you can get anywhere on the internet. It's got all the good stuff on there that you've probably learned. The triangles, the double, triple bottoms, the wedges, the head and shoulders, the flags, everything that you need to make money. But if I open this up and I just focus on a couple of these patterns, I want you to just look at them for a second, and I want to highlight the word entry, since that's what this video is about. Do you notice anything that might be a downfall when it comes to traditional chart patterns about these entries? In these type of formats, with what you're seeing right here, that is taught to a lot of traders out there, your entry is so high on a pattern like that. So if you're trading on a 1 minute or a 5 minute chart, for example, just a few minutes prior to that recommended entry, that asset was trading down there. Okay. Now look what this does to you as a trader. It makes your target prices and your stop losses extremely condensed. Do you see that? How they have these entries, stop loss, and your target prices. See how condensed those are? These will work for you. I'm not saying that they won't, and I'm not saying that they don't have a place, because sometimes we have to use these because markets can be unpredictable. But in 80% of the situations, what if I was to tell you right now that I could actually give you an accurate signal to where you can get in down here with a stop loss down underneath of that and the target price at the same location, reducing your risk exposure, expanding your target, and doing it with 80% accuracy? That's the Unsharp method. Now, this brings us to step number 1, which is how on earth are we going to figure out this pattern is going to develop long before it develops? It's not like we have a time machine or something, right? The good thing is we don't need one. All we need is a series of 3 candles, and it's that easy. Starting with something we call the lead candle. Now, I'm going to go over this in detail here in just a minute, but for starters, the lead candle is something that draws our attention to the setup taking place. And I know you've seen a very bold, robust, strong candle that looks like this. In fact, it's probably freaked you out. And you're going to learn here in a minute, that's actually done on purpose. But this is what draws our attention to the setup. Number 2 is something we call the confirmation candle. Now, the confirmation candle is exactly as it is spoken. It's to confirm the legitimacy of the buyer who stepped in and bought that bold, red, strong candle. We need to know their seriousness and their legitimacy before we put our money on the line. And the last part of this, which is very important, is the execution candle. There will be another candle that will appear, letting you know that a pivot is about ready to take place. We have to get in this spot as fast as we can. This is where our risk versus reward is at its best. Our risk is super low, our rewards are super high. Now let me show you what this looks like on a real live chart. So let's take a deeper look at this. Right here on the screen, you're going to see an intraday 5-minute chart of the S&P 500 ETF, the SPY. I want to make it clear again, I've already said this. I don't care what you're trading, don't care what time, 1 minute, 5 minute, 4 hour, 1 hour, that's irrelevant. The only thing that matters at this point is that you internalize the concept and put it to work for you. Now, this is spanning over a series of 2 days on this chart. And you can see already your eye should be somewhat trained for basic pattern recognition. I'm going to show you the difficulty with that. You can see you got a series of ups and downs, like a bunch of check marks. Did a video about that once, right? But over the course of a couple of days, it didn't really grow that much in price, just stayed compressed in a range, which is normal for a lot of assets. But what I want to do for this video right here is break down each one of those candles and to tell you why they happen and how this is going to make you some money. And to do that and to save time, I just want to look at the rallies. So let's start with this one and just kind of mark the very top of this rally. It could be up here, but let's just go with this one right now. If we retrace this back to its origin, you'll see that it started right here. So if you had a time machine and this chart in front of you, that's where you would enter at the very tippy bottom. Is tippy bottom a word? You'd be right there at the bottom of that thing and you'd be in that trade. So let's go back and tell me, what do you see before those candles? Because as traders, we can't figure out it's a long over here. We're late. We have to figure that out here. Now, here's how it's done. Take a look at the activity, the price action before this move happens. You have what? You have a series of lead candles. There's a flush move. Now, here's what I want to talk about. I want to try to make this as easy as I can because this is all you need to know. This, my friends, it's engineered. It is there on purpose. This is why you see it so many times. Like if I back this chart out, you're going to see this everywhere. There's tons and tons of flushes and abrupt shifts of sentiment. This is what stops the rookie and the new trader out. Now, I can go into this for hours. Don't want to do that. I know you've heard terminology in the market such as liquidity. That's a good one people use a lot. Market structure, stop trap, stop running. All of that stuff has a place. But this is an engineered move to create that liquidity. It's excess inventory. It starts a move to allow some larger party to get into the trade. That's all I want you to think. That's the basic element. There's a little bit more to it, but let's stay with that. And here's how you know. Because take a look at what happens. Let's open this up so we all can see it because it's really important. This is the lead candles. Now, they don't look as aggressive because the chart's really spread out. But take a look right here. Notice what happens. I've gone through this hundreds of times on this channel. The John Wick candle, some sort of wick, some sort of engulfing candle, something that shows buying is actually taking place. And if you look real close, you'll see at the tail of this candle and this candle are matching. That means over a 10-minute span, there were several attempts to try to press that sell off lower, but guess what? It didn't happen. The reason it's not happening is because that big buyer is taking little nibbles, nibble, like it's on an algo, and they're just chipping away. Now, that could be a fake. Let's face it. We all get faked out every once in a while, and it just blows through and it does this again. But right here, you're going to see the confirmation candle. It doesn't. So after 15 minutes of just jockeying around and slamming people all over the place, chewing them up, it does not go any lower. That's how you know. The lead candle creates the panic and fear to get the rookies to sell. The big houses come in and nibble away at those positions. It stabilizes over 10 to 15 minutes, and then all of a sudden, there's this candle. Beautiful, right? That is the entry right there. We want to be in, let me clean that up. We want to be in right there at the tip of that entry. Now you could have got another one right there on that little pull with the stop loss right here and take a look what happens, right? Now let me show you something like your typical flag pattern, right? Which would be this. You come up, you pull back, you would take it here, right? That would probably be your entry. I'm just saying probably. Stop would be right there. But look, that trade fatigued out real quick. Again, you would have made some scalping money. And I do want to make it clear. I'm not dogging that, saying that has no place in the market, because maybe it does. Maybe you were busy. You had schedule problems. You couldn't be there and catch the big move. Look, you have to make adjustments. This I know. But look, it fades out. You missed a big move, but the move was there earlier. Now let's just do this again. If I come over here and we look at the secondary rally, this pivot here, Let's mark it. The very top of this to this, right? Now, if we open that up, you're going to see the exact same thing. What happens before this rally? Right there, guys. Right there. You have your lead candle. Almost the identical print. And there is the execution or the confirmation candle. There's the execution candle. Hopefully I'm making that clear. Let me back it up. Try to take a deep breath here, right? If you look at these, let me just try this and make it a lot easier. This and this. If you look at that, they are almost identical in their formation. So think of this. The market gave you that trade in the morning. Then about an hour later, it handed it to you again. That's how simple this is. But you'll see it all begins with the trickery to sell. Now this brings us to step number 2, which is really important. Like, how do you trust this move? Because as a new trader, I'm sure that red bar probably freaked you out. You've seen tons of these on your charts, and they've probably already freaked you out. And you know what? They're supposed to do that. That's why they happen in the first place, right? But the key is this. How do you develop the strength, the courage, the cojones to jump in there when everyone else in the world just can't do it? And that's simple. It's called levels. What if I told you right now that there was a very predictable spot on every chart, every day, where it is most likely to produce the exact candles that you're looking for? Because there is. Let's move to the chart again and let me show you. Now, let's go back to that first level, the very first rally. And I want to lay just a nice line on here. It doesn't have to be perfectly straight, but I want to put the line at the very bottom portion of that pattern. Now, if I back this out, you're going to see that this wasn't a secret. In the pre-market, did this video once about pre-market activity. There was, or this actually post-market, this was being challenged at a specific area. And if we back it up, it's probably going to end up matching another area in the past where there was a cluster of activity. So let's look at how this is going to help us with the trades that we have. So for example, when something like this begins to move down, we focus on that lead candle. That draws our attention to the trade. As it comes down in here, about at this point, your eyes should already be focused on these other levels over here. That's where you should be looking for the confirmation candle, because the speed in which these take place sometimes, it's just too fast, especially in a high volume volatile situation. So you'll see it comes right into there, and that's where that move takes place. Now, if you look back here, the same move was a little bit of a higher low, but it was very close to that same area. So what made that move special in terms of the level is it gave you an extra piece of verification that that very large buyer has now returned to the market. And that's going to be hard to break that cycle lower for that day. So take a look. It happened right there. Now, if I move over to the other day and just kind of pan it out, you're going to see the same thing. All of these moves are taking place at predictable levels, right? Now, they don't have to be to the penny. I've always said technical analysis is not literal, but you can see right there, they're all coming in to a zone or a range, right? This would be something like a breakout retest coming back to visit the breakout. But look what happens. It actually dips deeper, right? This is not a bearish chart. Actually, until you break a deep level, which is all the way down here, you haven't lost the big buyer. Now, let me show you something you might not see when it comes to levels. Notice that in the pre-market, you get this, right? Again, I mentioned I've gone over this before. Sometime before, like an hour before the market came up, it was already trying to get frisky to the downside. Like there was that lead candle like this press, and somebody sneaks in there and puts some high volume buys in there. Now, that can always disappear at the open. But what I'm trying to highlight here so everyone stays on the same page, this move, these candles cannot appear anywhere else. So for example, you can't buy that candle, right? That candle has no support to it. The nearest support is here. The nearest recognition of a large buyer is there. Any sort of entries that you're doing here on that dive, bad idea. Bad idea, right? Same thing here. Entering here, bad idea. You need to get that level tested. That's how bad things happen if you enter up here and then it drops and then it drops again and then it drops again and just keeps going. I'm sure you've been in that situation before. Now, step number 3 will tie everything together. And you need this in order to maximize the quality of just not this strategy, but everything you ever touch from here on out. And I'm surprised more traders these days are not aware of it. And that is time. Just like levels, the time in which these moves happen is like clockwork. They're routine. They're every single day. And when you combine that time along with the level, along with the move, now you have context. You have something that is powerful and meaningful and puts you into driver's seats to profits. Now, let me show you again what I'm talking about right here on the chart. Now, again, sticking with that same chart here that I already have up, if you take a look at all of these moves, it's a real simple concept, is the element of time. Now, the numbers I have down at the bottom here, this is Pacific Standard Time on the West. I'm on the West Coast of the United States. Add 3 hours to that for the New York session. But look when this happens. It's between 6:30 and 7:30, right? And then you have another move that happens just about 10, right after the lunch session. And if you come back, and of course there's another pivot up here if we want to add this, which is pretty much where I'm trying to go with this is every 30-minute interval, you're getting some type of pivot. See the timing? So you're getting that pivot early within the first 30 minutes of trading. You're going to get a rally that may last an hour, followed by another pivot that may last an hour, followed by another pivot that may last an hour. You move to the next day, you'll see about the same thing. You're moving lower, right? There's actually a move right there after the market opens at that 7 o'clock spot. You rally for a good 30, 40 minutes. You pull back for a good 30, 40 minutes. You go back up for 34 minutes, 40 minutes, an hour, and so on. Now, that's not always 100% guaranteed. When we talk about time, when the market opens for any strategy you have, the highest form of activity takes place in those first 30 minutes. That's where all the games get played. That's where all of the premium levels get set for the day. And then after that, the markets tend to develop a rhythm. They get settled into a rhythm and the moves become a lot cleaner after that. So now we move on to step number 4, which is the final step. And I'm sure for most of you, this is the one you've been waiting for the most. Definitely I have. Because all of this stuff up to this point sounds pretty good. I mean, you got the candlesticks down. That's easy. You got the levels down. You got the time down. I mean, all of that stuff is just general basic stuff. But the question that you're left with now is, how do I use this? Like, how do I put this into a real live market? Well, don't worry, because I'm going to do that right now for you. I am going to take a live trade using the exact same formula that I laid out for you. Now, what I want you to do before I get involved in that, I want you to look at each step independently. I first want you to see the lead candle itself, how our awareness has been raised towards this idea. The next, we want to start planning out those levels. We're going to look to the left side of that chart for clues, details to where that big buyer is going to step in and help us, back us up, like our guardian angel in this trade. And then I want you to pay very close attention to my execution. Now, I'll go through this step by step when I'm making the trade, but I want you for yourself to look at each one of those and how it's done. And of course, the final piece of that puzzle is trying to put together a very high quality trade that yields us more than 2 or 3 cents. Like, we really want to make a lot of money on these trades. So let's take a look at what a live trade will look like in a real market, and then we'll go from there. So the trade I want to talk about here today was one that was taken yesterday. Right there on your screen, you will see the brokerage statement of the trade and the gains. And I want to use this one because it highlights not just the power of the Unsharp, but how it works in the most extreme situations, because yesterday we had CPI. And if it can work in that, it can work in anything. It's just the process. So on the screen, I'm going to use the TradingView playback feature. It's so much easier for me to explain it to you, and it'll make a lot more sense. So if we take a look at this right here, you'll see as the CPI came out, you get that lead candle. Now, the news is what generated that candle, but it doesn't necessarily have to be news. They will happen in a lot of cases. So there it is. So when you see that, and you start to see that candle, rather than panicking, the first thing we need to do is start looking to the left, right? And if I kind of back this out, there is a significant reason why this thing chose to bounce at that 21.5 area. If I make this chart smaller, you see there are several, I'll scoot it up just a bit, there are several buys zones right there, okay? So there's a good chance that somewhere between this 21.5 and 21.4, someone is going to try to pick it up. Now, here's the clue to that. That's a pretty wide range, and you're going to get wide ranges in drops. This is where the lead candle gives us the clues. Let's take a look at the very first candle right here. You'll see there was, in fact, a pickup. Now, that wasn't a huge buy, but there was a hand showed that somewhere around this 21.560, there was effective buying, like a good flow of buying. Now, the next candle does make a low. And this is why when we do trade in general, we don't put stop losses right under the low. They may trade under there and make some prints on price. But look, it does get picked back up. Now, these clues are very, very subtle, but they're happening at the right spot. Now, if that happened right here, you'd have to be super cautious, but it didn't. It came all the way down to that level. Now, if I kind of move this forward just a little bit, right, I want to show you a couple of more candles right here. So take a look right here. After about 10-15 minutes, you got a couple of things working for you. You have the element of time, which is this market refused to go lower. Now, it didn't really gain any traction and start to push higher, but you'll see it didn't go lower. Why is that? Because the market is doing what we said earlier. It's nibbling on those buys down into that zone. Now, at this point with this chart, it could still break the low. It might be just kind of gearing up for another low move. So we need that confirmation. And the more candles that we get that confirmation. So if I kind of just speed the play back up and we move forward a little bit, I want to stop right there. This right here, as subtle and slow as it is, this is the execution candle. Now, most traders would not do it right there, but let me show you why. I hope at this point you see it. Look at these three wicks at the base of this chart. They all held up right at that spot. Those three wicks, the easiest way to do this is confirming that buyer. So if I buy this right now, which I did, this was close to my entry. If I buy it right there, I have everything to gain and practically nothing to lose. Now, some people go, well, how do you know? You don't always know, but trading isn't about winning as much as it is probabilities. I've got enough data here telling me that's probably going to be the low. So if I just kind of trail a stop down there, right, I'm giving up just a little bit, but look what the target can be. This thing has the power and the potential to go so much higher. And when you have such great risk versus reward, you're ultimately going to win. So if I kind of put that long calculator here, take a look at what we have. We have like a 3.3 risk versus reward. Those are the kind of trades where you have everything to gain. Now I'll just play this back forward and you'll take a look. It just continued to grind its way up all the way towards those highs. Now, here's what I want to talk about. On this one, I sold up in here, but another reason for doing this is because when you have this much room and a stock or an asset moves in your favor, it allows you to grab a big gain. Because if I'm buying up in this level, most likely I got stopped. I can't handle pullbacks, okay? And if we just continue to play it through, you'll see it eventually works its way back up there, not without a few pullbacks along the way, but you can't survive those pullbacks if you're chasing those rallies. That's the Unsharp method. The power is it's getting you in where you really don't have to worry about your risk. It's so low, and that's how you should be trading. You should be risk first, reward second. Now, this might not have made it all the way up there, and that's great, but it's easier for me to figure that out if I had bought it here, right, and it took me out, fine. It's better than buying it here and then having it take you out. That's too much money to give up. And that's the key. Most traders, and most technical analysis strategies, if you go by that law that they're written, they're getting you in too late. And that's why you're not making profits. So hopefully that all makes sense to you and you can see how you can start using this. So anyway, that's going to conclude today's video. And I do want to take a moment right now to thank you for joining me today. And I hope whatever I discuss with you today helps you become a better, well-rounded trader. That's my goal. Now, whether you use the Unsharp method or the check mark or some other method or strategy that you're using, I always encourage every trader to always focus on levels and time. Really take a look at these charts without any indicators on them and just get a feel for that price action. If you really pay attention, you can find those big buyers and big sellers. You can find the proper areas to position yourself where risk and reward is very favorable. So I just kind of wanted to say that for a second. Now, as always, if you have any questions or there's anything that I left out, go ahead and put that down in the comment section. I'll do my very best to get back to everyone and make sure they understand because I want to see you grow as a trader as well. Don't forget that if you do want to have some great trading ideas delivered to your inbox every week, absolutely free. Every week we put together, my wife and I, a gains guide. It covers everything about the markets, the best assets to trade, gives specific buy, sell, and exit points, everything that you need to have some great quality ideas to begin your week with. So on that note, let me say thank you very much. Take care, trade well. I'll see you soon. Cheers.